So the stock of the day is Slack. All HadePlatform subscribers have been calling, emailing, texting, conversating of whether or not Slack is a good investment. And as a company, I love it. I'm a user of Slack. I love their design, the usability. I love the direction that the company is going. It's a wonderful company. But at $18 billion, at some point, valuation matters. The question is, has Slack already reached that point one day after its IPO? And if you look, and if and this is where being a fundamentalist or technical trader, or even, is where you can get tricked up, or even if you're a growth investor, because when you just look at the hard numbers of it's a stock trading at 40 times its sales. The growth seems to be decelerating a little earlier than I would like to see. 67% last quarter versus 82% and 114% in the previous 2 years, respectively. So, yes, growth naturally decelerates as a company matures, but Slack is not what we would call a mature company. It has 88,000 paid customers. That's a lot of businesses, but there's a lot of room to grow. This is still a newer industry when it comes to monetization. So there is a lot of upside potential, but $18 billion valuation. So when I'm looking at this company, it reminds me of one in particular that we talked about a lot several years ago with HadePlatform. A lot of subscribers liked it after its IPO. I did not. And that company is Workday. Back during, when Workday, hold on one second. Okay, so Workday has been a great investment over the past year, from, $120 up to over $200 now. It's done very well. But if you back it up a little bit and you look at its first 5 years or 4 years, you pretty much got dead money. You got a stock that, was $83 in 2017, pretty much the same price it was in 2013. And that's because it traded at a very similar price to sales as Slack. Furthermore, the company was burning through cash just like Slack. It was losing over $100 million a year, if not more, Workday was. And those types of concerns really got to some investors. And what happened was the company kept growing, but the stock stayed flat. So over time, as a company grows larger and larger and larger, the stock stays flat. The metrics start to look better. The price to sales start to go down. The operating income, the ratios start to improve. And more of your value/growth opportunistic investors start to realize the potential. And that's what's happened over the last, say, 18 months. Now, and beyond that, there are some other similarities that you could point out. Like Slack, Workday had a lot of competition from companies, big tech like Oracle. There was always a lot of M&A speculation with companies like Salesforce. Right out the bat, there's some of that with Slack. You've got a lot of people thinking that Microsoft or Google, who have competing products, might try to acquire Slack to consolidate the market some. And then there's even some talk that a company like an Apple or an Amazon might come in and try to add that to its enterprise offerings. Either way, I believe, and I'm just speculating, that Slack is most likely to follow a path like Workday. Don't expect too much in terms of gains over the next 3 or 4 years. It's gonna take some time, but sooner or later, when that price to sales gets closer to about 20, 25 even, you'll start to notice the stock will start to rise at a ratio of probably half as fast as its growth. So if the company is growing 40%, you start looking at 20% stock gains but in terms of the immediate future, at HadePlatform, we don't like to hold dead money. And that's why we have consistently outperformed the market each and every year, 250% better than the S&P 500. We don't hold dead money. We consider ourselves very opportunistic in buying stocks at the right time before they start to rise, and we get out quick before they start to fall. So yeah, so Slack is not one that I would buy right now, but it's definitely one that I will put on the watch list for 2021. That's the way I would play it. Thanks.